I'm Craig Lee.
I'm Robb McGee.
And this is Real Talk with Robb and Craig on Thursday, the 18th of February. And today we are talking about...
when is a good time to refinance? You know, Craig, we're still doing a ton of refinances. 2020, that was a big focus of the year because interest rates have been low. They've stayed low, and we're still doing a lot of refinances. And Craig has prepared a little punch list for us. If you're thinking about refinancing, we've got just a few scenarios here of when it's a good idea.
If you can drop your interest rate by at least 0.5%.
Yeah, we take that model from the VA. The Veterans Administration doesn't allow a VA IRRRL unless you can save at least 0.5 point. And so if it's good enough for them, it's good enough for everybody. You know, dropping 0.5 point, it's worthwhile. If
you're curious to how much 0.5 point would save you on your principal and interest, you can call us anytime and we'll run numbers for you. It's free. If you can recoup your cost in 36 months, another deal I stole from the VA. Well, in every circumstance, situation is going to be different. If you know you're going to sell your home in 3 years, obviously you don't want to refinance, unless you could recoup your fees, your cost in a year or even less in some cases. Then you know you just have to look at each and every scenario.
Yeah, absolutely. Another time, if you want to pay your loan off faster, if you reduce your interest rate, and let's just say for argument's sake, you're saving $200 a month with your refinance. If you continue to make the same monthly payment that you've already budgeted, you are going to pay your loan off years ahead of schedule, saving really tens of thousands of dollars. That $200 a month turns into a huge return. So refinancing and reducing your interest rate can also result in a much shorter loan term.
Yeah, I just ran numbers on a fairly good sized loan, I think 460, saving them 0.5%. And there's somebody who I know pretty well, and they're going to pay their home off faster, so they really don't need to do anything other than take advantage of the lower interest rate, keep paying what they're paying, and it's $188 savings. But because their principal and interest goes from 19 down to 17 something, if they keep paying their same payment, they will pay it off in 4 years sooner. And at $2,000 a month, it's $90-some thousand.
I mean, it's huge.
That's huge. Yeah.
The impact of that compounding interest and what it saves you. So in other words, along the way that we're saying, it doesn't matter if you are reducing your interest rate. It doesn't matter what your plans are. If you want a lower monthly payment, great. If you want a shorter payoff, having the lower interest rate is just going to help you achieve whichever goal you're operating on. Oh, if you want or need to save money, that ties right into what I was just saying. Obviously, the no-brainer result of a rate reduction is you have less money required to go out. It reduces down your principal and interest. We've had folks that saw their taxes increase. All of a sudden, their monthly payment had gone up over what they had purchased the home for. By refinancing, we were able to absorb out that tax increase, and sometimes you end up even saving a little bit of money, but it keeps your payment from continuing to go up.
So this is number 5 is one that this is when we got in the business, going back to 98, 99. Consolidating a bunch of your debt is one way to look at it. And every circumstance, again, is going to be different. But if you've got a credit card at 19% and you've got another one at 12, anyway, we can run those numbers and possibly save you with a cash out refinance. Is not going to be the same interest rate because you're taking greater risk to the bank. But your monthly outgo could be a huge savings.
And a cash out refinance interest rate is going to be way less than 19, or whatever you're paying on your.
We're doing 2 cash outs for VA, and their interest rate does not get affected. They're still at 2.25 on these deals. So again, if you're a veteran and you're above 2.75, call us today. Don't
take advantage of that.
Yeah, please do.
If you want to write off more on your taxes, one of the things you can opt for when you do a refinance, you can do what's called a rate buy down. Let's say you're not happy with where the par interest rate is. Well, you can apply funds towards a discount point, reduce your rate even further, and that discount point is a tax-deductible expense.
Yeah. What about, do you know if extensions are something you can write off?
I don't know, but it is a closing cost. So
Martin Burns, we're going to be calling you on that because
we'll check
you're
with the
our
experts.
go-to guy.
Yeah.
Can I ask a question?
Oh, yeah.
What is par?
Oh, thank you. Yeah, I use these terms. Thanks, Janet. Par means that is the rate sheet interest rate that had no discount points to buy it down and no give back or overage to lock in at that rate. It's at 0. So when I say par, I mean no buy down, no overage.
This is for your primary residence. If it's above, and I changed it because I'd done this one, but then if it's above 3.5% on a conventional or FHA, VA goes without saying if you're above 2.75 on a VA, but you could probably save a ton of money on this.
Yeah, conventional interest rates are not as low as VA or FHA. Why? Because they're not subsidized by those agencies. The loans are not guaranteed. It's a private loan with Fannie Mae or Freddie Mac. So those rates tend to be a little bit higher. But if you're at 3.5 or higher, we can save you a lot of money on a conventional rate as well.
This is where we just had a conversation yesterday. If you're on an FHA loan and you're trying to look at possibly going conventional, and you see that the FHA is, for example, I'm just going to say 3%, but on a conventional you're at 3 3/8. Well, you're not really comparing apples to apples.
Right.
You've got a 1.75 funding fee that the government gets. So basically what they're doing is paying down your interest rate, and that's the money they get for it. So if you really want to compare the two, do 1.75 on a conventional to your FHA rate, and you're going to be really close, if not even better.
Yeah.
In addition to that, on an FHA, which I love, they're great loans, but conventional does not necessarily it's not going to have the PMI.
Right.
And that's,
Whereas FHA always will.
forever for the rest of they changed that in 2011, I think.
He remembers dates, I never do. And that goes right into number 8, like you were saying. If you can eliminate private mortgage insurance. So if you are on a conventional mortgage term, or if you're on an FHA loan right now and you have built up 20% equity in your property, which around here that happens quickly because of our market. You could refinance, and one of the savings, in addition to lowering your interest rate, you could possibly eliminate that mortgage insurance. That could be hundreds more every month that you're not having to pay.
Yeah, and we've done that a lot, it seems.
Bunch of them, yeah.
The last few years.
Yeah.
This kind of goes back to, if you want to reduce the term of your loan, you keep paying what you're paying now, and then all we're doing is reducing the interest. So what that means, you're going to keep paying a higher amount. It's going more principal. Is going because your interest is reduced.
Interest rates lower, so you're paying more to principal reduction.
Yep.
Yeah. If you're currently in an adjustable rate mortgage, there are still folks out there that are in adjustable rate mortgages that they took out a couple of years ago. This is the time to refinance out of that adjustable rate mortgage. Lock in these low rates into a fixed rate, 15 or 30-year term. Right now, we've had people ask us about doing an adjustable rate mortgage, and Craig and I, we just won't allow them. It's not in your best interest right now. When rates are at all-time lows, that's not a time to be putting yourself into a rate that can move up, because you're guaranteeing it's going to move up. Lock in these low rates, and if you're in an adjustable rate right now, call us. We'll get you out of it, lock you into a 30-year fixed, and secure these rates.
This is going to go back to when America crashed, but the ARM, and some will say the option ARM, some will just say the ARM, but the 228s, and I'm going to just throw some stuff out there. That's what was really hurting people. Yeah. A 228 was where you were on a 2-year fixed rate. Yeah. For 28 years, it's an adjustable.
Right.
Well, that adjustment made a huge difference. And
as soon as the 2 years was up, they started climbing.
Skyrocket.
Yeah.
Well, then the equity wasn't being built up anymore,
right.
And so people had to go back and try and refinance. Well, a lot of them couldn't.
Yeah.
So, not a lot of them. I personally didn't do a lot of those loans.
But we saw a lot of people that got it, and a lot of people lost their homes as a result of that.
Yeah.
They ended up upside down. It was a bad thing. But if you're in an ARM, call us. Yeah, we'll help you. Then we have, if you've done major improvements to your home and want to pull out some equity to pay yourself back. As Craig was talking about earlier, Interest rates are a little bit higher if you're accessing some of your cash and equity, but those rates are at all-time lows right now as well. When one section of rates drop, all of them drop. So it's a great time to access cash. If you want to pay back yourself for a home equity line that you had done, you want to pay it off, good time to do it.
Yeah.
We can take some cash out and roll everything into one. If you want to make some improvements to your home and you've been waiting for the right time, this could be that right time. Access the equity that you've built. We can help you structure it so we make sure we don't add mortgage insurance back onto the loan. We'll keep you at 80% or less loan to value. We'll give you some cash at closing. You can remodel your kitchen or go on vacation when the world opens back up, or whatever you want to do.
When you're putting money into your home, and if you're looking at it to sell it or just to pull the equity back out, maybe call us and find out what are some of the things that you can do to really improve the equity in your house. Everybody thinks, well, I'm putting in hardwood floors, or and I'm one of those people. I thought, well, if this is going to help us, make a little bit more money on it. But there comes a point when you go above and beyond what the house is going to sell for,
right.
At that particular time, and just be smart about it. I mean, if you're doing that to sell it or to pull out the equity, that's one. If you're doing it because it's your lifetime forever home, well, you're going to have a different point of view on that, and it's going to work for whatever it works for.
That's right. And last but not least, if you have an investment property and you want to increase your positive cash flow.
How does that work?
Well, listen, like I was saying just a minute ago, Zeus is chiming in with us. I was saying a minute ago, when one set of rates drop, all sets of rates drop. So investment property interest rates, which are traditionally higher than an owner-occupied, they're dropping as well. So it's a good time to refinance your investment property. By reducing that interest rate, you reduce your monthly payment, which increases your cash flow on the property. It's just that simple.
That was just a few of the things that I just wrote down from going through a couple places, and when is a good time to refinance online. When you're looking at this kind of stuff, and you're getting bombarded like we all are with now's a great time to refinance, the government has done this and that, look into it. We have a great client who just told us that somebody had a higher interest rate than us by 1/8 of a point, and yet was doing $200 better in the payment,
Right.
which is not possible.
Something doesn't add up, so.
Yeah. If you want us to just look over the paperwork, whether you're going with us, I say this all the time, but it's true. I'd be happy to help somebody, whether they're using us or not.
Absolutely.
I think that you'll see that our rates are probably the best around, on purpose, because we did that to help out as many people as we possibly can, and we've done a pretty good job of it.
So call us. We'll run scenarios for you. If you want to refinance, we'll start the process.
Also, please go to www.realtalk.mortgage. It's got all of our Real Talk videos on it for the last year almost. We've been doing this.
Everyone's a winner.
I don't know what that means. Wow.
Janet's shaking her head too. It means everyone's good.
Okay.
Yeah. All right.
Next.
Yeah. I'm Craig Lee.
I'm Robb McGee.
Give us a call. This is Real Talk with Robb and Craig.